Yo. Okay, what's going on here? We're going to be doing the trade review for Wednesday, February 18th, 2026. And so, what I'm going to do is I'm going to go over a top down analysis, pretty much go over what we talked about in the free telegram and some of the ideas and areas that we looked for, and then what ended up playing out. I'm going to also go over here, let me see here really quick. I'm going to also go over, let me see how everything's looking here today. Okay, cool. So I'm gonna also go over the actual entry because if you guys follow me on Instagram, TikTok, or found this on a YouTube short, you'll see how we ended up taking one attempt. That first attempt went in our favor, looked really good, and then we were able to scale out of about a 1.5 R. Then price came back into the break even area, and then we ended up finding another shot for a 4 plus R trade to rally to the upside. So really quickly, the first thing I want to show here, let me make sure that we're live here on YouTube as well. Okay, cool. We're live on YouTube. Cool. Yo, what's good, Tay? So, really quick, like I said, this will probably be more of like a quick session today. Just going over, like I said, the New York Open entry and its overall bias. And so, when you look at the bias overall, when I came into this, we were looking for this was basically my outlook right here, looking at that overnight structure and just understanding, where those demand levels were going to be. So pretty much what I was looking for was before New York Open was to see if we were going to maintain this 4 hour demand candle right inside this area, order block, whatever you want to call it. But it's just going to be an area where shorts are going to exit their buys most likely, and then you're going to see usually a reversal inside those type of areas. So I was really watching this 4 hour candle from here, and then when you look at the 1 hour on the far right there, we were looking at that candle as a reference point to see price go under opening price, right? So point of interest and opening price. So your market opens, your New York opens, your daily opens, and New York opens. So New York open, market open, daily open, London, those type of areas, right? Those are usually hot key areas where the market likes to respond, and individual players like to come in and place their orders, right? And so before the open, I'll show this here, and don't mind this sell. That's just something from the end of the day. I'll also talk a little bit about that. So before the session started, essentially what we could see, this would have been 8 a.m. So this would have been 7. So essentially this is what we were looking at, right? We had price overnight buyers were already in a massive profit, right? So the daily open was here. So 5 p.m. my time here, Central Time Zone. Price opens up, sells off, starts to go higher, and rallies up in the overnight. Now, what helped me out today in these trades as well was the fact that I had some overnight buys, right? So if you guys follow me on Instagram or you're in the free Telegram, like I said, you'll see that price basically started to close. I was doing some notes actually, and then I seen a pretty good risk reward setup that I just wanted to take because I wanted to be inside that demand area. And so I ended up taking a trade right here under the 800 level. So it looks something like this, right? And I was targeting just getting above those highs. Now, because I was going to sleep here around this time, this would have been 2300 hours for me here Central Time Zones, like 11 p.m. at night. And so I was walking out of the office at this time, and I had 5 contracts that were in profit. So I pulled 2 contracts and left the other 3 for a TP of the 24,900 level. So I've seen that deliver as well. So I woke up to a nice bag, right? I think it was like $800 across the accounts. And then coming into New York, that's what made me decide to say, well, cool. If we have 2 options, right? We have an option where we could come down into this 24,800, reaccumulate under opening price, and then go higher, which that's what ended up playing out. Or I said we're going to roll over, right? Essentially like this. We would roll over and go deeper into a demand area like this, and then reaccumulate to go higher. So we ended up getting scenario number 1, which was awesome because it made sense with where this buy was essentially an expansion. It wasn't the greatest buy, but it just happened to line up on higher time frame that I thought pretty well to go take previous day high. And so that was like the overnight position. Now, like I said, when you're looking at like an overnight player, you just have to understand where they were at, right? And the scheme of everything and the context. So, oops, sorry. So now when we focus our attention back to this special candle, right? Now what you can see is they had an imbalance, right, for value gap, whatever you want to call this, right? I call them imbalances, but just for the terminology sake of most people that take trades, I believe ICT trades, this is going to be considered a fair value gap, right? So imbalance, either way. And so I like to take positions, right, that are going to be, if I'm bullish, I like to take positions that are going to be in alignment with opening price. So if we're bullish, I like to buy below opening price in bullish conditions. And if we're bearish, I like to sell above opening price in bearish conditions, right? And so since we're essentially, if you look at it like this, right, we're making higher highs, higher lows, higher high, higher low, higher high, higher low, we're in bullish conditions, right? So I'm going to be looking to buy under opening price. And so already closed out the overnight trade, came into the morning with a pretty good profit, and then we get the New York Open. Okay, and so I'm going to break down the 15 and 5 for that one. And so this was a beautiful setup today when it comes down to the actual execution and just like overall understanding of what was going on. Oh, he's stupid. The overall understanding of what was going on. So now when you look at this, right, the New York Open opens up, and the first 5 minute candle that we get, I like to look at 15.5 for my intraday framework to set up trades. And so that first 5 minute candle is manipulation, right? They manipulate the price down. Now something you can learn from me, and you'll hear this in multiple videos, is you want to understand that the markets move fractal, right? So I've looked at so many charts that I understand that when a 15 minute wick prints, there's going to be a 5 minute dump candle inside of there. And so a lot of traders, right, they get caught up taking the trade too early in that first move, right? And so what you want to do is when you're taking what I call a mitigation mantra trade, right, and you're bullish and you're going to attack that high of day, or you're just trying to attack an R multiple to go higher, you're going to want to wait for that sign of strength, right? You're going to want to wait for this candle to close here, and you're going to want to wait for, I believe, right, a break of structure higher to just kind of confirm that the bulls are in and shorts are starting to cover. Right? If you're taking that trade a little bit early, so I'll show like a 1 minute here, and let me know if it's kind of foggy or anything. If you're taking that trade early, you're going to get stopped out. So if you guys look at my first TikTok or Instagram video today, I did take mine fairly early, right? But I was able to still manage out a 1.5 R, right? Now the trade that I took that ended up being the blast was this one here, okay? And so I'm not going to go over the full entry strategy right now, but you're looking for specific things that look like this, right? So price will be making its way down like it did in that candle here, like we're looking at here. Price shoots up back above that area, confirming buys are going to be in the markets and shorts are covering probably from the high of day. And then you're looking for a retracement back down under those points of interest to be able to start to frame up your R multiple. Okay, so it's just a formation that you'll see over and over. Now, where I took my first trade, was right here at 41, I believe. Yeah, I think it was at 41. It was close to market open. It was like somewhere in here. And like I said, that price went up. But the one that I really want to focus on was the one that happened here at 52, right? 8:52 a.m. was because we had the sign of strength close. We had the 8:45 to 8:50 push back into demand, into the order block, in the whole level, below point of interest. And then we had the response. Now, when I'm looking for the right side response, I'm looking for the dump candle, or what I call a railroad candle, the sign of strength, and I'm taking my trade in the second candle after the sign of strength, right? So essentially what that trade looked like was, I'll do it on replay mode, was like this. I had second candle sign of strength. I already have my R multiples set up. And so when you look at this, you got to respect your risk. The number one thing when you're looking at these type of setups is if your entry's late, I don't care. You need to still respect what you're putting out every time, right? Because you're the one that's in control of your profit factor. It's not the markets, right? The market's just going to print and move. So we were looking for about a 5 to 1 R here. Now, if you can see here, if you're looking left, the high of day was actually about an 8R move, right? So, I mean, that's an amazing move if you're really sticking to the script. And like I said, when I dropped the video this weekend going over the risk reward table, and you'll have more of an understanding of how to think in probabilities, you'll see why this matters so much. Because if on my average losing trade, I'm risking between, I'd say, about $160 to $200, really about 160, right? But I give myself a little bit of a buffer of the number there, right? And so in this situation here, what I'm saying today, even if it's 160, if you're sticking to the script of your math, right, and you're risking 1 R per trade, then you're getting basically right here with 8R in total, right? Or if you end up partialing and going 4R, you're getting like 3 to 4 days worth of losses, right? Right there, just in that one setup. Okay. And so for us, like I said, we ended up taking this right at that New York Open. Now, this is another thing. You want to buy below New York Open in bullish conditions. So that's why I ended up wanting to buy that point of interest. Now, I used to, if you guys have followed me for a while, I used to like to put my risk right on the edge low and keep it very tight. I don't care about that as much, right? Because even if I would have entered like a little bit higher right here and took this trade when it was going up and put my risk in this situation here, I still would have pulled out an R multiple for the day, if that makes sense. So you don't want to be too stickler on that. What you want to be more stickler on is that when you place that trade, like sometimes you'll place this box and then you won't take your trade to appear. You have to move that box to where you took that trade, right? So for example, we have in our MIDI Boys group chat, we had an individual take trades with us on NQ, and he took a really, really good trade today. Really, really good trade. I think it was 2 people actually, and then one of them is my boy Chad. I think he's on here. And now the thing is though, when you go look at the screenshot, you can notice a lot. Me and my good friend Tay, we're like really anal about, and pause when I say that, but we're like really sticklers about, little nuances, right? So we noticed a lot of little things from that trade, and that's what I'm going to kind of focus on here. Is yes, your framework may not always be the best in the beginning, and one thing I would say is like you just want to have enough contracts that you can cut the volume at the 3R multiple, right? So that you can secure your 1.5 and then keep playing with that same contract size for a while and get familiar and get very comfortable with executing. Because what most people do is they try to like jump up to like 4 or 6 or 8 contracts, but they're not ready for the size yet, right? And you can do a lot of damage with 2 contracts, especially if you're copy trading across accounts, okay? And so thought this was a beautiful trade when you really look at the overall of everything. Like I said, we were just looking for that HOD. And so I'll kind of show here how that looked. So if you're taking the trade here like this, right? I came into this with 4 contracts, so we'll hypothetically go back one more. Now we take it in the second candle, but just for the replay purposes to kind of get close to where our actual entry was, right? We took 4 contracts here. So I'll show you the kind of the management here as well. 4 contracts. Now see, that's a little bit different than my box. So let's just go ahead and let's practice how we're gonna play, okay? So this is where the box is gonna go. So now you know your true R multiple in this situation is gonna be here. Now move your stop loss to your 20 handle risk. Now here's what you do, okay? You wanna immediately have your TP set, right? Like when you're taking a higher time frame bias, I'm not gonna go too far into that either, because we're just talking about from A to B targets. But if you see more liquidity on like an H4, H1, daily, like the higher time frames, like to go higher, there's a way to trail this. But when you're just like trying to pass your combine, or you're just trying to build some solid days, just go for targets. Don't try to, 10R things and 8R things when you only really need 3R to be successful, right? And so in this situation, immediately take your TP to, I would say, that high of day, right? Because that was a really, really good spot to go ahead and target. And then now what you want to do is you want to go ahead and look at where half of your volume would be as a 1 to 3. Now I have all my stuff preset, so you'll have to go in and do that for yourself, right? But always know where your 3 to 1 R is, right? So now what you're going to essentially do is you're not going to wait until it gets there, right? What you're going to do is you're going to come in here, and you're going to, since you're in a buy, you're going to put a sell limit, right? Sell limit and half the volume of whatever you're trading, and you're going to drag that limit immediately, right, to your 3R. Because essentially what you're doing right here is you're going to secure 1.5R. Now think about it, like I said, if you're risking 1R per day, you're already putting yourself up in a situation here. You're already putting yourself a trade ahead, right? So you're gonna have your trailed risk here, and then you let the market play out, and then you have the higher time frame target, okay? So bam, price responds right under the New York Open, second candle sign of strength, boom, it starts to go crazy, right? Because it's starting to, get that short covering fill and that fill for London high. Now remember too, understand New York high is where the New York opened. So New York open is here, so the New York high had already been taken. So at this point, you're looking for an internal liquidity from essentially the London session, right? And so price starts to move in our favor here. bam, and it delivers the 3-to-1 R, which now that makes us down to half volume. So we just secured 1.5 R. Now here's the thing, right? You can go for the full area, right? You can go for that full area if you're confident, you've been doing this for a while. But the way the system works is if once you secure that 3R, you're looking for exactly where the 5R target was. If you want to be, continuously grabbing like 3R, 4R days and just, building really, really good consistent days, then you want to know where that target is. You don't even need to swing for the fence, right? Because here's the math behind it, right? You've already secured, right, with this play here, you've already secured 1.5 R, okay? Secured with this trade here. Now, if you were to go and take 5, right, you still have half volume and you hit the 5 area, how much R are you securing here now? You're securing half of 5, which is 2.5, okay? 2.5 R. So now you have on the board, if you just play it this way, just like I'm showing you here, right? You already have 1.5 and have 2.5, so 1 plus 2, 3, and then plus that. So now you're securing 4R on the day. Remember, I said you're risking 1R per setup, 2R max per day, right? So right here, if you win this trade, and don't even go for the high of day, right here, you're going to have a 4R day. If you do that twice in a week, you're going to be in a really good position. So this goes farther than, a challenge or a combine or anything like that, or eval. This is about profitability, right? You have to become profitable before you ever decide to, I would say even, continuously spend money on evals, because essentially you're spending money on an eval or a combine is an investment, right? Because you look at, if you look at your, like a Excel sheet for the year, right? One of my goals this year, I told myself, is I don't want to spend X amount of dollars on evals. Now there's a couple new platforms I'm going to be trying, like, Lucid, Alpha Futures, like stuff like that. If you're trying new platforms, cool. But when it comes to Top Step, I'm not spending any more money on Top Step. That's how I feel about it, right? That's the goal, right? That's why that's the investor side of me, right? Because every time you put out money, yes, you may maybe only be putting out, $100 for a 50K account, but how many times do you do that before you get the payout, right? And that's an investment in itself. So just to kind of keep it clean here, because I don't want to run through the whole breakdown, right, of the whole move. But essentially, I'm going to go the higher time frames to kind of show you what we were targeting. But this is all you really need right here, right? Secure your 1.5R immediately. Trail your second half of your move to wherever the 5R area is, which would be, like I said, half of 5 is 2.5, and you just secured 4R on the day. All right, so let's see how that plays out. Obviously, bam, it hits. Cool. Okay. And so that's the simple setup that I believe can really help a lot of traders, not only pass their combines but be profitable traders. Okay. And so which one are we on here? Let's go back here. Now, when it comes to higher time frame, and we talk about what we were actually looking for here. Let's see. Why is it all? My bad. I'm just trying to make sure I have the right one. Okay, so now we're going to go 4 hour, 1 hour here, just to kind of get an idea. Now, when we were looking for TP zones, right, we were already bullish 4 hour. We seen this demand candle respected. We've seen this demand candle order block, whatever you want to call it, respected. Now, what we were looking for was 50% of the fair value gap, right, or the imbalance, whatever you want to call it, right? So this gap right here, 50% of this area was a great target area between here and then basically the 25,100 area. And so, I mean, we could really go in depth, like I said, on this trade and really push it, but it just really, like I said, you don't really need to force yourself to do that in the beginning, right? Now, if you built a buffer on your combines and evals or your personal account, you've got, a pretty good standing with that, then yeah, you can trail the markets and really, maximize your profit, but don't feel like you have to do that. You know what I mean? Especially in the beginning. So let me see one thing here. Okay, cool. So really quick, I will kind of go over like what we ended up doing too on the remainder of that trade. Let me just go back 15.5. Okay, so we took that trade here, and like I showed, you would already be out at that 1 to 3, or excuse me, 3 to 1, whatever it is. Now let's look at a little bit higher of a position, right? Because as we start to go, let's say that if we knew we wanted to hit that on a higher time frame, we want to know those R multiples. So like this was like a 10 to 1 R, which is an amazing day. Guys, understand this. With my system, right? What essentially with a combine, let's say, right? How much do you have to make on a combine 50K? You have to make 3,000, right? So now you want to ask yourself the question, how many R multiple trade wins of 4R do you have to win to pass your combine, right? And when you think about it, right, it's $3,000. You divide that, I believe it's about 15R in total, right? So you're telling me, you could basically hit 3, 4R trades, right? Minimizing your risk, right? By maximizing your profit potential. And then what is that? 4 times 3 is 12. So basically about 3 good winning trades over a 30-day span, right? Um, or 4 good winning trades, right? Because 4 times 4 is 16. That's going to put you in the door. But where the key is going to lie, right, is that when you lose 2 trades, if you lose like your 200 and your 200, you're done. Because if you lose another one and you're down 600 on the day and you're shooting for 4R, you're already putting yourself at the negative advantage. You get what I'm saying? And so you really want to be a stickler on the math. That's really what it comes down to, is the math. All the other stuff will come over time, I believe, when the idea, location, stuff like that. So we ended up, like I said, taking that trade up, and then price started to kind of exhaust. I'd say here around 9:30, and that was it for me personally. I was done on the markets at that point, and then I had like a small runner, I believe, up to the actual 25,100 area, but that I really just wanted to focus on the actual entry that we took because it was a good 15.5 mitigation play, and then talk about what we kind of expect going into tomorrow. Okay, so make sure this is a 1 hour and a 15. Okay, and tomorrow we're pretty bullish, right? And then 15 and 5, and then 5 and 1. Just make sure I got them all here. Why is that all backwards? I don't know why this is all backwards on here. It's kind of frustrating. I think it's because I moved them a specific way, but let's go back here. So what I would say going into tomorrow, let me go 15.5 here, is everything's already pointing bullish, right? Let's drag this to 1700 hours for tomorrow because that's going to be the close of day. Tomorrow's Thursday, right? Let me go to 1 hour, sorry. Just make it easier here. 1700 hours. Okay. And now go back to the 15 here. And you can see double top wick, right? Like this right here. This area right here is what I'm looking at. All right, so what you want to do when 2 wicks touch is you want to go ahead and draw arrows to the future, okay? So I already know pretty much to about, let's just say midnight. Let's just draw the arrow to, I like to draw it to where the market actually is, and I just kind of move it in the morning. But that's already kind of letting me know that we have a really good chance of going higher because they shelved the market. Now, can they go lower first tonight and take out, my key level, 24,850, and maybe previous day low as of now, the New York low? I have to just rechange some of these. Like I said, I'm just kind of going over the review for today's stuff. But this will be the previous day low for tomorrow's session, right? Actually, excuse me, this IBL will be the actual previous day low. But this will be a very important key level for me because it's New York's low from the previous day. And so, we may make our way down, right? Kind of break down, take out some traders, take out some liquidity, and then reaccumulate inside demand, right? We could very well do that because this is your last swing low, that's your swing high, and your swing high has really good targets. Now, usually I don't take overnight trades, but recently on 15.5, I find pretty good positions, right? I have a good eye for it. So a situation like this, I'm not going to say I'm going to take this trade, but I would start to look at something like this, right? Getting right below those lows, that's a 5 to 1. Right, and then just kind of maybe go and open up, if you have a combine, you can open up a practice account on TS, and you can, kind of simulate that, or just do it here this way, right? But that's a really, really good area to start to attack. Now, the reason why I'm using 5 to 1 is because I've done a lot of analyzing and data on what's called ADR, so like the average daily range of NQ and understanding its moves. So a lot of times, you know, the price will move about 100 points, 70 points, and then reverse, or like people will step in because you have small time players playing such large positions for just short moves. And so the way we look at this market, you know, if this was to go in our favor, we know where our target is for the 5 to 1. We obviously can reach for that bigger target, right? And we want to know what that is when it comes to our multiples at all times, which is about a 10 to 1 setup if it was to continue lower. And so, same situation. You want to know where that bigger time frame target is, and you always want to know where your 3 to 1 R is going to be, right? Because essentially, what I would do here is just put an alert, right? But it's like I'm just doing that because I'm not taking a personal trade right now. But like you're putting your half volume here, and then you're gonna let this play out. It's gonna go ahead and hit that limit, right? The buy limit, and then you're already gonna have your TP set for your 5R. And what are you doing here? You're gonna be securing 1.5R, and then you'd be, if this one hits, half of 5 is 2.5R. Beautiful 4R day. Now, what I would say here is once you secure that 3 to 1R, this immediately goes break even. Okay, so this immediately goes break even. When this goes break even, now, right now, because you're already at that 3 to 1R area at this time, and you're very close to the 5R. Now you can maybe extend your TP, right, to like 8R, right, and you're thinking in halves, so this would be a 4R setup alone just by itself. Or if you think they're going to take New York lows for a 10 to 1, then you basically already secured 1.5, and then you do half of 10, which would be 5. That's like 6R. Remember again what I said for your combines, right? You only need 15R with this system. Okay? Now, me personally, if you're not as experienced or you're just still new to trading or R multiples, only take your trades during New York session, right? Because you wanna take less is more. Less is always going to be more. All right? And so that's pretty much what I'm seeing. Is I think we're going to see more upside. Let me check the 4 hours on all of them. That might confuse people a little bit. So let's stick to this really quick. But overall, when you're looking at the structure, I do think we're still pretty bullish. But really, really nice mitigation mantra type of day, right? Demand candle, price rallied, already closed higher before New York session, equities open, push back into the area, trapping shorts, right? People trying to short very quickly at New York in the wrong location, and then to blast them for, the London high / high of day was a beautiful setup, okay? Now, I'll talk about really quickly the setup that I took to end the day as well, because we're understanding that in order for buyers to make a profit, they're going to have to press the sell button, either market or they're going to place a limit, right? Now, I took my second half of the day sell, right, on the 15.5. I didn't even look at a 1 minute because I didn't need to, right? Now, what made me end up taking that was the shift in price delivery essentially here on the 15. So price was, higher open, higher close, higher open, higher close. Like, it was just bullish, right? But right here, right, if you look at this candle right here, we finally got a 15-minute exhaustion candle, and then they manipulated, if you're looking at bodies over here on the 5-minute, but if you're watching both like you should be, right, you see that they did not close this 15-minute candle's body higher than whole level, and it's a lower high close, right? So for me, that's all I needed to see to understand that we definitely could make it to here fairly easy, okay? And so came in here, ended up taking a position, I believe, right in here, 12:10. Yeah, first 15 minutes an hour, last 15 minutes of an hour, right? Took that position here, was looking for a 5 to 1R again, because I'm trying to set up everything 5 to 1R so that when I do get my 3 to 1R, no matter what, I'll go ahead and secure 1.5, and if price does go ahead and deliver my 5 to 1R, I'll go ahead and have a 4R setup. Now, what I was able to do was I ended up taking 1.5R. I went break even on the remainder, and then because I was up from overnight trade from the night before, up from New York session the same day, I was up like 9+R at this point. I said, yeah, I'll let this extend down, right, to the inefficiency, the imbalance, the fair value gap, right, 24,900, right? And how many R multiple was that? Basically, when I extended it, it was about a 10R. So I secured another 1.5R here and then I come back and secure another 5R on the day here. All right. So everything is R multiples. And you'll see when you start losing. Right now, when you're winning, it's hard because your bag is going to be bagging, right? But what you got to focus on is what if you start off your first 2 to 3 trades in a loss? Are you going to stick to the script? Okay. And something I want to show really quick, since you're on here, I think Chad, I don't know if you are, but if you watch the recording, I'll kind of show what we were talking about with your trade. Great trade. Just a couple things I would say, just based on your context and what you said, right? Was and I'm just doing this for us to get better. I'm not saying it in any kind of way. So, great trade. I don't know how good it'll show up here, but if you notice right here, bro, you have a risk of 24,775, or you have an entry of 24,775. Beautiful entry, and then you have a risk of 24,752. So 65, 55. So you're a little bit over the 20 handle risk. So just go ahead and wherever you enter from, accept the 20 handles only. So where that box is, where you enter, you want to make sure that box is set up for 20 for 60. And if you're going for 5 to 1, it's 20 for 100. Okay, because like when you come in here and you're like, took half off as it pushed 1 to 3. If I was to go frame that back up and show you again, that trade wasn't at 1 to 3 yet, from based on your entry, right? But still fire. You know what I mean? Well, based on your stop loss placement, your entry was fire. That's what I'm basically trying to say. So your entry was fire. It's just you extended your stop. So if the trade would have went against you, right, which is one of the only things that we can control is our risk. That's really where you want to hone in. But otherwise, man, amazing trade. And then I think you'll really like, and most traders, even myself too, right now, is securing that 3 to 1R, and then just going ahead and at that 5 to 1R, securing that other half of the position, and just get really repetitive at executing the system. And then that it'll unlock once you build a buffer, you know, on your accounts to be able to open up and, you know, go for those 8R, 10R, half of those positions once you've locked out that 1.5. But the more times out of not, you know, what'll happen is, and why traders fail, I'm not saying just evals, but just being profitable, is because they'll have one big red day where they give up like 5R of what they normally are risking. And so a lot of times what this does, this plan and this system as well, essentially what it does is it basically puts you in a position to, like I said, minimize your downside and maximize your upside. But at the same time, what it really does is it keeps you taking profit, right? And so taking those 1.5s, let's say you hit a 1.5 and then you didn't want to take any more trades that day, and then Tuesday comes, you do it again, you only take a 1.5, and then day 3, you lose. Well, you're only accepting a 2R max day, right? So you lose just a bad day, Wednesday comes up, you lose 2R, and you're like, okay, I'm going to walk away. But because you close those two 1.5s, you're at least still going to be up 1R on the week, and then you take that trade Thursday that just freaking bangs for 5R, right? Or 4R, right? Because you'll close half of it, etc., right? So stay in the mindset of, of that in your positions. And, yeah. So I appreciate you guys watching. We'll be back on for another trade review. I have a couple things I need to do tonight. And then I think Friday what we're going to try to do is trade live here on the YouTube channel. So I look forward to that. But if you guys have any questions, make sure and DM me. And then let's run it up. It's going to be an amazing week. Probably one of my best weeks, honestly, since I've been doing this, right? So, and I'm going to work harder than, I'm going to work just as hard or harder than, like, there's nothing happening great. So that's just the mindset that we have here. So I appreciate you guys. I hope you guys have a good rest of your night, and I will talk to you guys here in a little bit.